Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And it is Tuesday night, a little bit late here in Denver time, but certainly some interesting things happening in the gold and silver markets today. So, a quick update for you. As you can see, huge spreads occurring in gold prices. You see the spread between the COMEX April futures and spot metal was $42 an ounce at one point, although it was much wider earlier in the day. I've never seen this before, said one gold trader who's been in the market for 30 plus years. Although we'll skip that and get to this, which is what I thought was really interesting because the LBMA, the London Bullion Market Association, issued a statement saying the London gold market continues to be open for business. There has, however, been some impact on liquidity arising from price volatility in COMEX 100-ounce futures contracts. LBMA has offered its support to the CME Group to facilitate physical delivery in New York and is working closely with COMEX and other key stakeholders to ensure the efficient running of the global gold market. Efficient running. Leave my comments aside on that one. Again, certainly a couple of comments there. I mean, just hearing an announcement like that, usually that's the kind of announcement you get from governments right when things are about to collapse. So a little disconcerting. Here you see people are buying gold like it's going out of style. Now, are we at the break point? I did get an email from our friend Dave Kranzler tonight, who you see on the show often, and he thinks this is quite serious, and I think so as well. Yet I would distinguish between whether we have product available in the required form, and or let me put it another way, and is it just that things are unable to be transported now or delivered in a specific form versus have we reached a shortage of metal? Now, both are possible, especially with the surge in physical demand that we've seen across the globe. A little early to say whether we're headed towards a failure to deliver, but certainly some signs that have the radar up, because you see an announcement, CME resolving physical gold squeeze with delivery of 100-ounce, 400-ounce, 1 kilogram bars, increasing pressures from market player and significant liquidity issues in the gold market are prompting CME to make some changes in how it delivers. So again, you just keep hearing liquidity issues. Although this was interesting, came across a couple hours ago. ABN AMRO abandons gold investors. AMRO leaves gold investors disappointed as the bank closes all wait accounts for gold, silver, and platinum. Approximately 2,000 customers who have precious metals in their wait account at the bank have to sell them before April 1st. If they fail to do so, ABN AMRO will sell them at the current market price. I am assuming that returning or delivering physical gold and silver is not going to be an option in there. And again, just interesting to see all these things hitting at the same time. Especially here is, this is actually what Dave Kranzler forwarded over my way tonight. There's Roy Seabag of Gold Money. I've received some important information relating to what's going on in gold markets. Today, some banks failed to deliver physical in the COMEX bar EFP. As a result, these banks suffered large losses, which will soon be announced. They also decided to exit the COMEX market. Continues on down here. Now there remains a big shortage in physical in the COMEX denomination, so rumors are the COMEX will announce a force majeure and allow banks to deliver LBMA bars instead. This should be announced imminently. Let's see. I guess the Crypto Charlie doesn't seem to like that one below. I do want to clarify, this is not fact. I don't think even Roy Seabag is stating this as fact. But certainly what he's saying makes sense to me. And could that be in the works? I guess we will see, although Roy seems to think so. And another interesting tweet that Dave Kranzler sent over. I'm not sure exactly who this is coming from, although it looks like they're posting a Reuters story here and mentions the gap between gold futures on CME's COMEX exchange in New York widened above London prices by about as much as $70 an ounce. And in the beginning, LBMA and several major banks that trade gold have asked CME to allow gold bars in London to be used to settle contracts to ease disruption to trading. So, gee, lot happening. And we had one more story. Oh, yes, there was a video also on Kitco with Keith Newmeyer talking about the silver supply squeeze only about to get worse. So you may want to check that one out, of course, after you're done catching up with all your videos on Arcadia Economics. Yet anyway, I thought this was interesting today in the gold market. So you see 2 days ago, we were below 1500, then trending up here, goes up, 80, 90 bucks over a day. And then this is today here in this green line, gold goes up from, let's call that 1575-ish to almost 1700. And then that's stunning in its own right. But then to see that it gets pummeled down below 1600, comes right back up, and then gets pummeled down again, hangs out below 1600 for a while, then rallies as some of this news that you just heard was emerging throughout the afternoon. And as you see, this $9.30 down, that's from the start of today, somewhere around here. So as you can see, still overall from as of 24 hours ago, still up quite a bit. In fact, you can just look, there's the red line and you're 24 hours later. Over in the silver market, you can see, well, silver's only up 6 cents tonight. Again, opened on Sunday around 12.50, $2 higher. So silver rallying back quite a bit. Was a big day again. Actually, is this one refreshed? I think so. Yeah, I think it was another big day here for the silver miners, as we will see in quite a second. Come on, CenturyLink. So yes, a lot of green and silver. Big day for First Majestic, Mag Silver. I mean, you're seeing 15, 20, 25% on all of these across the board. So hang in there, folks. If you had your portfolio beaten down last week, coming back a little bit. And one final note before we wrap up for tonight that I know people are probably going to be sad, but JP Morgan says it will close 20% of his branches because of the coronavirus pandemic. I know you're crushed. I know. Anyway, we'll wrap up here, but if you found this one helpful, then just click on the box that's about to appear, digs back into some stunning developments that happened yesterday, and we'll take it from there.